If you're thinking about buying or selling in Ottawa in 2026, this is one of the most important videos you'll be watching. Today, I'm going to break down exactly what happened in Ottawa's real estate market in 2025, what the December numbers really tell us, and what this means as we move into 2026. Because 2025 didn't behave like a normal real estate year. We didn't get the explosive spring. We didn't get a summer slowdown. We didn't get a dramatic crash. And we didn't get a rebound fueled by panic or pressure. What we got instead was something far more important: stability. But stability doesn't mean the same for every homeowner, every buyer, or every type of property. If you want clarity instead of headlines, go grab a coffee, get comfortable, and let's get right into it. Let's start with the big picture as to how 2025 ended. Ottawa's housing market closed out 2025 exactly how most seasoned, mature markets do: quiet, measured, and cautious. And I want to be very clear because quiet does not mean weak. December brought the kind of slowdown we expect every single year. Buyers paused, sellers held off listing during the holidays, the showings slowed down, the sales dipped, inventory pulled back, and prices didn't spike, but they didn't collapse either. On the surface, it looked uneventful. But this is where a lot of people misread the market, because when you zoom out, something very different will show up. Despite a slower fall and calm finish to the year, 2025 actually outperformed 2024. Total sales were 1.3% higher, and total dollar volume was 4.1% higher. That matters. It tells us buyers didn't disappear. It tells us money was still moving. And it tells us decisions were still being made, just more carefully. This wasn't a market driven by fear or missing out. It wasn't driven by bidding wars, although we did have a few. It wasn't driven by speculation or blind optimism. It was driven by fundamentals. People bought when the numbers made sense. They sold when the timing worked for their lives. They waited when the uncertainty felt too high. And that kind of behavior is actually a sign of strength, because when a market can slow down seasonally, absorb more inventory, and still finish the year ahead of the previous one, it means the foundation is solid. If you're planning a move, that's exactly the kind of environment you want to be operating in. Not chaos, not hype, but a market that rewards preparation, pricing, and strategy. And that's the real story of how 2025 actually ended. One of the most interesting things about 2025 is just how unconventional the year actually was. It didn't follow the script most people were expecting. Spring was delayed, activity didn't surge the way it usually does when the snow melts. There was no rush of buyers flooding back all at once, and there was no sudden sense of urgency from the sellers either. Then summer came, and instead of seeing the typical mid year slowdown, the market just kept moving. Not fast, not slow, just steady. Fall didn't bring a sharp correction or a sudden drop in confidence. The activity cooled, but it cooled gradually. There was no cliff, no panic, no mass pullback. And winter finished exactly the way a normal winter should: quiet, measured, and predictable. When you put all of that together, it tells us something extremely important about the psychology behind the market. Buyers and sellers weren't reacting emotionally. They weren't chasing headlines. They weren't rushing because they were afraid of missing out. And they weren't dumping properties out of fear either. They were reacting strategically. People waited until the numbers made sense. They ran the math, they watched the rates, they paid attention to inventory, and when things aligned, they moved. When uncertainty crept back, they paused. That's not weakness, that is discipline. And it's exactly what a wealthy and mature market looks like. This is also why Ottawa continues to stand out compared to some of the larger Canadian cities that experience sharper price corrections. While other markets were swinging hard in both directions, Ottawa adjusted slowly, absorbed change, and kept moving forward. No drama, no extremes, just balance. And that kind of behavior doesn't happen by accident. It happens in markets built on fundamentals, not speculation. Now, let's talk about the December activity, what the numbers really mean. In December, 587 residential properties were sold in Ottawa. Now, on its own, that number can sound underwhelming if you're just glancing at headlines. Yes, it's about 32% from November, but that drop is exactly what we expect to see every single year when December arrives. Showing slow, buyers shift their focus to holidays and family. Sellers pause their plans until the new year. That seasonal slowdown is not a warning sign. It's normal market behavior, especially here in Ottawa. And when we put this into proper context, it becomes even clearer. If we remove the abnormal pandemic years of 2020 and 2021, when December activity was artificially inflated, the average December number since 2018 is 583 homes, very comparable to December of 2025. This year, we had 587, and the average in those years was 583. So this wasn't a weak December. It wasn't a struggling market, and it wasn't buyers disappearing all of a sudden. It was a normal December in a balanced market. On the buyer's side, caution is still very much present. Buyers are deliberate. They're taking their time, they're double checking affordability, and watching the interest rates very closely. On the seller side, fewer listings came to market, which is exactly what happens during the holiday season. No big surprise there. Many sellers choose to wait until January rather than list while people are distracted with the holidays and spending time with friends and family. And of course, the holidays naturally slow everything down for everyone involved. But this is where the story really starts to shift. Because once we look beyond the sales numbers alone, something much more important shows up. And this is where things get very interesting. Let's talk about the inventory, the quiet shift buyers and sellers need to understand. Active listings dropped from 3,628 in November to 2,544 in December. And that part is completely normal for the holiday season. Every year, listings come off the market. Some homes will sell. Some sellers decide to wait until the next year. And fewer new listings are introduced while people focus on the holidays. So on the surface, that drop looks like the market is tightening. But this is where you have to zoom out, take a step back. Because when you look beyond just 1 month, a very different story will appear. Even after the seasonal pullback, inventory is still elevated compared to previous years. At year end, active listings in December 2025 were 19% higher than 2024, 45% higher than 2023, and 89% higher than 2022. And that is not a 1 year blip. That is a clear multi year shift. Since 2022, Ottawa has been moving steadily toward higher inventory levels across almost every segment of the market. Seasonal slowdowns like December still happen, but no longer do they race to supply that builds earlier in the year. And this changes the dynamic completely. Buyers now have more choice. They can compare, they can wait, they can negotiate. At the same time, sellers are facing more competition. Homes are no longer competing with just a handful of similar listings. They're competing with dozens, sometimes hundreds, depending on the price range and the property type. That's why the old strategy of listing and waiting for bidding wars simply doesn't work for most properties anymore. Pricing, preparation, and timing matters again. And this shift is clearly reflected in the numbers. Months of inventory rose to 4.3, which brings us more closer to long-term pre-pandemic normals. Not a buyer's market, not a seller's market, a balanced market. And balanced markets reward strategy, not the shortcuts. Let's talk about prices. Why stable does not mean flat. The average residential sale price in December was $658,943, essentially unchanged from December 2024. No big jump, but also no big drop. But averages don't tell the whole story. The MLS Home Price Index shows that benchmark prices have declined slightly month over month since the summer, yet still finished 2025 slightly above the 2024 overall. So, what does that mean in plain language? Prices are adjusting slowly, not crashing, not surging, just recalibrating based on supply, demand, and property type. This is exactly what a healthy market does after years of volatility. If you want a more detailed report on all the pricing in Ottawa for December, just click on the link above. I will put a link to the video talking about all the pricing in Ottawa for December. And the other thing I want to talk about is why property types matter more than ever. This is where many people get confused. Ottawa is not one market. It's several markets moving at different speeds. First, let's talk about single family homes. Detached homes continue to be the most resilient segment. Inventory sits at 4.3 months, right in balanced territory. The benchmark price increased 0.4% year over year. Detached homes remain the anchor of Ottawa's real estate market. Townhomes. Townhomes are adjusting. Inventory is slightly elevated. Pricing pressure is a little bit more noticeable. The benchmark price declined 3.7% year over year, while the average sale price only dropped by 1.4%. That gap tells us demand is still there, especially for first-time home buyers, but buyers are being a lot more selective. Townhomes are still the entry point for many, but sellers need to price and prepare properly. And what about the condos and apartments? This is the softest segment of the market. Months of inventory are sitting near 8, well above the balanced levels. Benchmark prices declined year over year, and sales activity remains subdued. Ottawa hasn't seen the condo oversupply issues of Toronto or Vancouver, but this is the segment to watch most closely for 2026. So, what does this mean going forward into 2026? As we move into the new year, it's important to reset our expectations. This is not a market that's setting up for a sudden surge. There's no switch that flips on January 1st, and there's no single rate announcement that suddenly sees buyers rushing back into it all at once. Yes, interest rate relief has helped improve confidence. Monthly payments are more predictable. Affordability has stopped getting worse, and that has brought some buyers back off the sidelines. But buyers are still cautious. They're taking their time, they're running the numbers very carefully, they're watching the economy, and they're making sure the decision makes sense, not just today, but for the long term. Economic uncertainty has not disappeared. Job security still matters, and household budgets are still under pressure. And affordability remains front and center for most buyers. Because of that, what we're likely to see in 2026 isn't a straight line up or down. We are going to see gradual movement. Some months will be stronger, some will cool off, certain segments will outperform others, and some property types will continue to adjust. But the overall theme remains stability. Ottawa continues to be driven by fundamentals, not fear. People move because of life changes, not panic. They buy when the numbers work, and they sell when the timing aligns. And they wait when uncertainty feels too high. And in a balanced market, the people who do the best aren't the ones who rush. They are the ones who plan and are strategic with their decisions. If you are thinking about buying, selling, or planning a move in 2026, the most important thing right now is strategy. Not timing the headlines, not guessing the market, not waiting out of fear. Every property type is behaving differently. Every neighborhood is different. And the best decisions are made with real data and a clear plan. If you want to know what this market means for your specific situation, make sure to reach out. No pressure, no obligations, just clarity. Thanks for taking the time to watch this video. If you found it helpful, feel free to share it, hit the thumbs up, and don't forget to subscribe to my YouTube channel for more straight talk on real estate. I will see you in the next video, but in the meantime, if you have any questions about the real estate market in your area, in your neighborhood, on your street, make sure to give me a quick call, or you can always email me at jeanricher@jeanricher.com. Merci beaucoup et bonne journée.